Hey, it's Soleil, and this is episode 392 of the Orange Pill Investor. Friday is roll day, of course, but I'm going to take a little quick second to talk about number go up technology and the dangers of long calls. And so there are some people who famously bought strategy long calls like back here, somewhere between somewhere in 2022. Doesn't really matter when they bought them, even half of 2023, and they caught the full bull cycle, assuming that cycles are real. Let's assume that the 4-year cycles are real and we're in the bull cycle that will last through 2025. If you FOMO'd into strategy here, then you probably had a pretty sour experience for the next 6 or 7 months. And then if you finally decided to FOMO into strategy because you've been listening to Quant Bros and True North and the Orange Pill Investor and X, Bitcoin X going crazy for strategy. And if you FOMO'd into it here, if you had shares and you can just diamond hands for the next year to 5 years, you're probably okay. But you still might not feel good about buying at 375 to 500 a share and then watching it all evaporate. And even Saylor himself has a story like back in the day, like he wrote the friggin' mobile wave for God's sakes. And even with him, he bought like some calls in Apple and theta decay just shrank the value of those options and it decayed and it decayed and it decayed. And then like Apple actually went up right after his options expired. So I think it's just a good reminder that buying long calls, which I have done way more of in the last year than I ever have since I started trading options in 2020, and some of it worked. Like in November, those worked fabulously. And all of the ones that I bought between November and hell, even as of today, none of them have been profitable. I suppose if you bought some here and you literally jumped out 2 weeks later, those would have been profitable. But every other single piece of leverage that I have purchased since November clearly has been terrible. There's almost no way that you could have timed this. Like, I mean, I guess you could have just like somehow bought the bottom and then jumped out like quickly. But I don't think most traders that are just doing this not as a profession, but as like, you know, they're trading it with the money that they earn from their real life work. Like catching these is not realistic. So the only way to really profit with these long calls are to either, catch these peaks or get a really, really good favorable entry position. If you can get a really good favorable entry position and the expiration is long enough, then you can just kind of keep like one eye on the market and then, anywhere in here is going to be profit. But, it shouldn't be a reasonable expectation to FOMO into something at all-time highs and then easy peasy lemon squeezy, it should just double again from there. And then, oh, hey, wait a minute. I know you said it wasn't financial advice, but I treated it like it was financial advice. And I bought up here and now I'm down. Like, what the fuck? How come you didn't tell me it was gonna go down? Like, stocks go up and then they go down. And I think I'm gonna steal a line from the guy that I watch every day for my Tesla hype. It's a guy named Stephen Mark Ryan, and he constantly says it is that Tesla is the best risk-adjusted opportunity in the market that he is aware of. And I think that's my opinion of strategy. And even Tesla, like, this guy has ridden Tesla up. He buys at the top, he dollar cost average, he buys at the bottom. And, he's spectacularly up over, I don't know, 5 or 10 years of owning the stock. But he's got a very long-term view. He considers himself an investor, and like trade the word trader is kind of a dirty word for him. Now, I don't go that far. I'm perfectly happy to trade uh, strategy, but the the market and Bitcoin don't care about when your options expire. So it's stomach wrenching enough to FOMO in with shares here. You can diamond hands through that potentially. And, if it takes 1 to 5 years, you'll end up winning. But if you FOMO here and you're buying calls that have expirations, you know, I would say that leaps, like, oh yeah, leaps are good, right? Because they're a year away. But let's just go all the way back to 2021. If you FOMO'd into leaps in February, you couldn't get, you could go 5 years and barely be right. What, this is like 2 years later? I don't even think you can get 2024, 2025 leaps in 2021. I don't even think they go out that far. It's usually like a couple of years max. So there aren't any leaps that you can FOMO into at the cycle top that will be profitable. So please just keep your expectations realistic and understand that the leverage you are trying to get when you buy options is also the leverage that can happen in the opposite direction. So this is a little bit of a valuable lesson I think I'm learning for myself, because back here May 2020 is about when I started trading options, but I was a seller. So I learned how to, open a sell call, sell put, and manage those trades. And then, of course, in whatever it was, March, I think, of 2024, I saw Quant Bros 1 and I was like, oh, there's actually a real life uh, case for buying calls like that. It didn't it didn't even make sense for me to buy calls unless it was in a poor man's covered call as a justification to sell them, right? I wasn't buying calls unless it was as an excuse to sell covered calls on top of them. And, right about here somewhere, I was like, oh, like buying calls can actually be profitable. Like that didn't even occur to me during this 4 or 5 year stretch. I had seen some people have some decent results with momentum trading, day traders and stuff like that, but I never really developed the skill set for it. Um, and put that on my list of goals, I suppose. But I'm like 99.99% sure that strategy's price will be higher in a year than it is now. But I don't know if it's going to happen in May, June, July, August, September, October, November, December. There's just no way to know that. in my opinion. If you can read the charts and figure out the the crosses and the hammers and the blah blah blah, then good on you. But I'm not terribly confident with those tools. Um, I'm not really sure they're real, to be completely honest with you. There could be an argument to be made that if you don't learn them, you're you're competing against other people who at least do. So you want to kind of like know the mind of your enemy, I suppose. But there are way too many people's accounts that I follow where they've said, "Oh yeah, we're due, such and such is due for a reversal, and there's blah, this, that, and the other thing," and then they're just directionally wrong. Like, and you don't, and with long calls, you don't even have to be directionally wrong. You can be directionally right, but if it doesn't happen fast enough, you can still lose money on long calls. And so that's why for me, I'm not giving up on the option selling, and in the future, I'm definitely going to try to pay way more attention to profit taking with these long calls. Okay, that sucks. Must be the VPN. Yeah. All right. I'm not going to risk bumfuggling the stream to turn off the VPN. Market Chameleon does not like my privacy, apparently. All right, getting that out of the way. Let's check the chats and then let's get into some roles. Maybe I can talk long enough for strategy to go back down to like 275, make these cheaper. Deeply, haha, right after your long calls expire would be so market, wouldn't it? Exactly. Like I know the market is supposed to be an inanimate object. I guess it's not even really an object, but it does seem to have a deeply sadistic personality. What's up? What's up, Hash? Howard got to run. We'll listen later. Say something really smart to teach me something. You're going to be sorely disappointed. What's up, Al? Okay. So, you know what? I don't even have to answer questions. The chat's got me covered. Thanks, Victor. Uh, calm like a bomb. Should have been able to figure that one out. Yeah. So, do you believe in M2? So I would be lying if I said I really even truly understood what M2 is. So, I like listening to Kathy Woods in the know, and she's constantly talking about M2 money supply. And I'm assuming that's just like some combination of like the money printing, like the new money does it include credit? I would assume it kind of includes credit, right? It's going to be money injected in the system. Um, I'm tempted to say yes because it seems like I've heard people say that if you just track the M2 money supply, it tracks pretty well with, the stock market going up, real estate prices, shit like that. So it seems like it's probably just I don't know if that's like a proxy for the inflation rate somehow. Um, Let me know if I'm completely butchering that. But yeah, I do. I guess I need to know more about that question too. Like, do I believe it's real or the that it's really what's pumping the market and prices? I suspect that it is. If I have even a decent understanding of its definition. Deeply, I feel like technical analysis almost becomes self-fulfilling prophecy thanks to algos, Fibonacci levels, moving averages, all that shit. Yeah, the only thing that I really throw on my chart a lot of times is like the 50 and the 200 just to see like, I've check out the SPY or something. And if I want to know if we're in a bull or a bear market, I don't mind checking this and being like, "Oh, okay, this kind of sucks." Um, it doesn't necessarily mean that I'm gonna jump out here. I think if you follow it over like a 20-year period, um, a lot of times these will be indicators, but when I think about the incentives for number go up, like all of the rich and powerful people in the entire world want it to go up, therefore it will, at least for now, right? Like Bitcoin might take over, and in 10, 20 years, that may not be the case anymore. But for now, the people who want it to go up can make it go up. Maybe not in the short term, right? We got some fear around the tariffs, but there's something called the taper tantrum that sometimes the market would throw a fit and tank, basically forcing the Federal Reserve's hands to give them the lower interest rates that they want. And so I think this might be something similar. It's just a tariff tantrum. And um, the market already seems to be happy about the pause. And in 90 days, if we're still dealing with this, maybe we get another crash and maybe it'll be bigger. But at some point, the negotiations will get done. The money printers will come back to life. Interest rates will go down so that the United States has even like a snowball's chance in hell of paying the interest on the debt. And the US will get away with, basically a soft default. They need lower interest rates and higher inflation to basically default on all this debt because it ain't getting paid. So all of the incentives for the people and governments and corporations that matter are incentivized for a number to go up. But it may not go up before your long calls expire. So uh, tread carefully, right? Because as far as I'm concerned, every dip on strategy in Tesla is a buy for the next 10, 20 years, but it doesn't mean that that dip will be rewarded in a week or 2 months or 6 months. It 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 might take a while. What's up, Kanal? I am using private internet access. I'm not like unhappy with them. I think they probably are okay. Uh, the only time I have an issue would be like when I want to log into my bank account. They don't like a VPN, which I find annoying. So if I want to log in and do my bill pay, I gotta briefly turn it off. Who else doesn't like it? I think with Verizon or whatever, even to just log into my account, freaking Verizon is a pain in the ass. So there's a f- there's like some privacy warfare going on, I think, right now. Like you can get you can use a VPN and then companies will sniff out what IP addresses the VPNs are using and then block them. And maybe we'll have a way to block the blocks or spoof the blocks or something like what did I start using with Chrome? Adblock, Adblock, and what's the other one? Adblock Plus, and I can't remember. Yeah, but there's some good tools, but then they've always figured out a way to get around the tools, so it's like this constant back and forth. Can I learn more outside of just asking Grok and LLMs? What, can you learn more about VPN? Victor, I think TA really affects market psychology, so yeah, self-fulfilling. And it's funny too because every time I see somebody talking about TA, they'll be like, "Oh yeah, I think, okay, we got higher highs and higher lows, so we should expect, this value." And then it's always like, "Unless we don't cross 550 and that invalidates the trend." And I'm like, "Okay, so you're basically saying if it goes up, your TA was right, and if it goes down, your TA was right. But at the end of the day, you have to choose bullish or bearish. So is it like flipping a fucking coin at that point?" What was the only one that I heard somebody of some reasonable intelligence was talking about the Bollinger Bands? Is that the one that something is oversold or overbought? There's these bands or whatever. And I think that they said that those aren't even like remotely predictive until they're like way, 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 way oversold. Like it has to just be like this extreme value for those to even like make any sense. I hope I'm saying that right. May not, because I just when people start talking about TA, kind of just my eyes start to glaze over a bit. Epic Jeff Park on True North. I absolutely agree. And it was funny. It was like every time we ask him a question, it was like we were getting a little bit more than we bargained for. It was like, holy shit. There's you start to really get an inkling for the things that you don't know. It's like, holy shit, there's this whole area of finance that I couldn't possibly know about it because you didn't even know it existed. Hash says, look up the song if you don't know. What are we talking about? Saad says, does MSTY success increase as assets under management strangle the strategy price? I've heard a couple of people suggest that, and I don't think so. I think if it is, if it's on a short term sense, kind of guiding the market towards certain prices or strikes, I think that only lasts for just so long. I've said it and I've heard other people saying it, so I don't think it's like anything I necessarily came up with that's clever or anything, but it's like holding a beach ball underwater. You can only do that so long before you lose your grip on it and then it shoots up out of the water and hits you in the face. So, MSTY with a covered call strategy is not like they're not they're not out here selling a bunch of naked shorts. If they were, those would be probably more like have the potential to cause like a kind of short squeeze, but maybe like a gamma squeeze because they would have to freak out and start to cover. And Waffle Goblins has some decent videos tracking MSTY's uh positions and then when they cover. And he noticed some little trends, like if they were getting wrecked on their shorts on like a Friday and then they were covering, then it would push the stock up a little bit. And then they got a little sneaky and they started covering like on a Wednesday. So I don't know if that was intentional or if they just panicked and rolled early for some reason, or if it's just to keep the market guessing and not really. I don't know if they're that sophisticated, thinking, chess moves like, we have to roll on Wednesday sometimes just to keep the market makers guessing or something. But MSTY positions are not bearish, they're limited bullish positions. So they do have to take long positions for for all of their shorts to make sure that they are covered in the event that strategy goes nuclear. However, while it may reduce some of strategy's volatility from day to day, eventually that beach ball is going to come flying out of the surface. And the next time strategy goes to, 500 or 1,000 in an 8-week period, they are going to just be, their shorts are going to get wrecked, and then they're going to get wrecked again, and then they're going to get wrecked again, and they're going to get wrecked again. And every time they have to cover and rebuy those positions where they were previously potentially suppressing strategy's price, now it's going to be like they're just going to be buoying that up. I think Bitcoin is going to be causing the world in general to be experiencing more volatility. And since strategy is built on Bitcoin's vol, and then MSTY, has these long and short positions on top of each other, it's it could be suppressing the vol in the short term, but I think that's all just kind of adding up towards creating scenarios where we might end up getting one of those gamma squeezes that we're kind of kind of hoping to see. So, uh, I probably could have said that in a lot fewer words and just said, "I think so, but not sure." Uh, but not forever. Roscoe, if I believed the price would be up 100% by July, what's the best call option for me? Not financial advice. Um, well, that's really not hard to figure out, but I don't know why that you would think that. So, where's my so if we're gonna double, that means we're gonna be sitting at 600 a share in July. So I like to say you want to give yourself enough time to be right, right? But if you're saying you know the future and you know what that the price is going to be 600 in July, then you wouldn't want to pay for more theta. You wouldn't want to pay for more extrinsic value belong or beyond July. So I guess, well, if you didn't know if it was going to happen until July 31st, I guess you'd have to buy these Septembers because Augusts are not available yet. But if you knew it was going to happen, like July 1st, I guess you could buy the Julys. But if you don't know if it's going to happen until at some point in July, then you don't want to pay for any more. Um, you don't want to pay for any more theta than you have to. So while I personally buy leaps when I can, or at least like 6 months out, if you had a crystal ball and you knew, I guess it would probably be September. And then obviously, if you picked any strike over 600, you'd lose all your money. So it would have to be a strike under 600 so that you could go in the money. And let's see, buying them right now would cost you 1,500. So you'd actually have to get to 615 to break even. Um, So we've ruled out anything over 600. I'm guessing you would want to capture as much of the gamma curve as possible. And if you took a look at some of the charts that Grain had been sharing recently, he revised his attack the tail strategy to kind of choosing strikes around uh, gamma as his primary Greek, and gamma starts to accelerate around the at the money price. So right now, 300 is at the money. So gamma's probably going to start accelerating maximally, what, like 10 to 20% out of the money and last until 10 to 20% in the money. So I'm guessing if you wanted to land about 20% in the money, the strikes would need to be about what, double 60, 120, 480? I guess probably under the 480 strikes. Anything over 480 and you wouldn't be capturing as a 100, as much of the gamma as possible. The closer you buy to 600, the cheaper they're going to be. The, you know, the lower the strike, the more you're going to pay. So, I mean, I guess I would go with somewhere around 480 plus or minus 20%. So, anywhere from 430 to 530 or something. But that's a weird conversation to have when the title of this video is, number will go up after your calls expire. So, oh man. Uh, I'm still got some confidence about my Septembers. Having some kind of pump. But the future is not promised. They could be, arguing about these fucking tariffs for the next 6 months, and we might not get a pump until October, end of year. And previously, I was not a big fan of talking about super cycles. For me, it just seems like human psychology always pumps things too high and then it has to correct. And the Bitcoin pumps seem to be so spectacular that it takes like a year and a half to unwind them. So I was kind of thinking that the 4-year cycles would continue, but the only thing that gives me a little bit of pause thinking that maybe this would be a super cycle is that for Trump to cement his legacy, the perfect scenario for that to happen would be just tanking the market now, which is already happening, and it could go a lot farther down before it gets better. And then turning on the money printers and just supercharging the market all the way up through the 2026 elections. Having a roaring stock market might, you know, might be important to him. And then for him to just have a roaring stock market from then all the way through the end of his term, I think in his mind might be important to try to, if he's trying to get his head chiseled onto Mount Rushmore or something. And in that case, if the whole market is going up, I don't know, it would be weird for Bitcoin to be going down while while inflation, like it would probably take 6 months for inflation to kick in. So, Trump's probably happy with just letting inflation run hot and letting the next guy fucking let it be his problem. So that's the only kind of way that I can fit the super cycle into my brain. So in that scenario, it would kind of make sense, but I'm still kind of like thinking we'll have, a huge blow off top by the end of this year or maybe like super early in 2026. And then we get the bear market like we've gotten. But, Bitcoin can do whatever it wants. It just doesn't care what we want or what we think is going to happen. And so that would be kind of like it's not really Murphy's law, but that would kind of make sense for people to just start to figure out the 4-year cycles just in time for the 4-year cycles to be invalidated. That would be kind of funny. But yeah, I think that's I think that's probably where I would come out with that. So, but here, do this. Um, so I'm still talking about Roscoe's question about if you believe the price would be 600 by July, what's the best call option? So you should probably go to options profit calculator because what I was going over just there was just kind of a guess. But you should plug strategy in here. Go out to like July or September, and then you can plug in any of the strikes, right? You know, you can plug in the 480, you can plug in the 550, you can plug in, something at the money or a little bit in the money. And then it's going to generate a chart for you. And you can take a look and say, okay, on July 15th or July 31st, this strike will be worth this much. And it'll give you a whole big ass chart where you can see um, which ones win the most and don't. The other wild card in there is implied vol, because if you go into manual settings, you can put the implied vol in, and if you don't change up the implied vol, then it's going to give you calculations as if we're sitting at 600 a share with average vol. But if we're at like 400 a share and then within 2 weeks we're at 6, implied vol is going to be through the roof. And so that's going to pump up prices as well. So just keep in mind that unless you tweak implied vol setting, it's just going to give you like the generic returns for each strike. But I'm thinking 480 is probably ballpark. Oops. Rob Hall, yeah, Verizon won't let me log in with VPN. Yeah, they suck. Patrick, today I sold a very small number of strategy shares and bought IMST. I will convert IMST dividends into 1080 calls as they come, not financial advice. I love that. It's basically what I'm doing, right? I'm selling calls and I'm plowing those into highly speculative ones. Let's see, Roscoe. Thank you. I asked Grok, but your answer was much more informative. Anytime. And so, you know, I I can't answer those questions directly, obviously. I'm not a financial advisor, but those are the tools that I use to make my decision. So I'm happy to share how I look at the strikes. And I don't think it's a secret that gamma accelerates around the at the money price. So that's not really a controversial statement, I don't think. All right, let's minimize this stuff and let's get rid of me. So, as I was yapping, the price went back up to 296, and that's going to be good for me selling covered calls for next week, but is going to make closing these bad boys kind of brutal. So, in my infinite wisdom, I went ahead and sold the 260s. And let's see what that is going to cost me. Let's close these and the 285s all at the same time. And let's turn the volume down. Y'all were about to get fucked up. All right. 30 grand that cost me. So when I say that covered calls is limited bullish, I think I built about 3% callaway value into those. So I missed out on about 10% of the upside this week with these covered calls. Now, my account is absolutely up for the week. And let's just see some positions that became profitable that particularly leverage. Like I can peel off some shares if I want, but for the most part, I would like to peel off some profitable leveraged positions. I don't know if I have any left. I already got rid of my 200 strike poor man's covered calls. These 250s are in the money, but they're kind of, they're down about 2 grand a pop. Now it's possible I've collected more than 2 grand worth of premium, so these might be reasonable to close. But let's scroll down here. So these are slightly in profit. So I can close 4 of them for 16 grand. That would get me close, a little over halfway. But I think that's about it. All right, so let's see what it's gonna what kind of I clicked on Tesla. All right, so let's see. I've got 1,100 shares. So if I want to sell, and I'm running a negative 656 theta, so I'm losing $656 a day on this account if I don't add some covered call positions. So if I go ahead and grab the at the money, or excuse me, the weeklies, I could sell like, you know, 5 of the 305s or 5 of the 310s, 6 of them, and knock out and end up with a positive theta. Or, and I think this is what Jeff Park alluded to with IMST trying to capture some upside is, I could go out here and I could just go right to the expected move, or which, funnily enough, is my actual my cost basis, which is kind of hilarious. Um, somewhere between the expected move and the one standard deviation line. If I go to 375, That gives me about 20% upside, a little bit more than 20%, like 25% upside. And if I can get this to fill for 1400, that's about 4.5% return on capital over, 42 days. But in general, I'll be looking to roll these every 2 to 3 weeks. So best case scenario, I would be able to keep half of the 1400 in 2 weeks. So that would be 700 in 2 weeks, which would be 350 in 1 week, which would be just over 1% return on capital per week with 25% call away value. Beyond 25%, that would be when my upside would be limited. So if I want to go for the weeklies and I want 25, well, I won't be able to get 25% call away. But if I want just 1%, 1.5% returns, that's going to get me to like, like 450. I could sell the 332s. Let's just say the 330s. That's about 1.5% for the week and about 10% call away. And then for me to get to positive theta, I'd have to sell about 7 of these. Let me go back to 45 because I forgot to look at the theta on that one. So theta is at 36. So 10 of them would get me 360. 20 of them would give me the 720 that I need. So this is not really going to cut it for me if I want to turn this into positive theta. So I think at the very least, let's do, I'm going to do 5 of them though, out here to 375. I still got to come up with 500 and I've got 600 shares available to me. So if I go back to the weeklies, what did I say? I can do 6 of them. I'm going to do 3 at the 310. And 3 at 325. All right. So that gives me just positive on theta. These are a little aggressive, but I'm collecting much more premium, very little upside. And then these are a little bit more premium, but it's spread out over more weeks. So the amount of theta that these are actually capturing is much less, but I've got a nice healthy chunk of call away value in here. And, if these end up getting called away at 310 or 325, it would actually be under my cost basis. So those would actually be, potentially losing positions. I generally don't let that scare me though. So, all right, got 1,100 shares. They're all covered. I got 11 covered calls here. And so capturing that amount of premium, I'm still upside down 16 grand. So I think I'm going to use this as a as an opportunity to unload some of this leverage. And the only leverage positions that I can find that are even in profit here are these 375s. And so if I close all four of them, that should give me the the cash that I need. Cha-ching. I think I fell into the long leverage trap here. My leverage positions are way too high. So, you know, even though we're not at the levels I would really like to um, capitalize on my leveraged positions, I'm really kind of desperate for any excuse to unload some of this leverage. And so with this last 2 grand, I'm going to hold on to that because, well, let me just double check the rest of my positions. 35 days, it's been open for 2 weeks. I can let that one go another week. Same. The debit spreads, I'm going to need a pump to like probably back to 450, 500 a share to even have a chance on those. The Septembers are, down 10, 20%. Not the end of the world. But GameStop, sold a very aggressive 2350 call. So I limited my upside by like almost 300 bucks. Totally fine with that. I'm just running the wheel. If shares get called away and I have to buy them back and called away and buy them back, it's completely fine. So I'm anticipating that we close over 2350 and that these 100 shares will be called away. I could just roll this out. It kind of amounts to about the same thing. I could sell my long calls for a small profit, but I'm really looking to, these are positions that I want to at least like double. So I'm not really looking to sell these unless they go to like 180 or more. And so there's two if I want to still be in the GME game, I've got two things that I can do here. I can just roll this to next week. My shares won't be called away. And, that would be for a debit, of course. But I can still collect, 90 cents on stock that's worth 26. So it's over 3% return on capital for 1 week. Or I can just let them get called away and I can sell a cash secured put at the 26 strike, collect a buck. That's like 4% return on capital. But, GME could be back to $20 a share next week, and this would be a giant loser. So either of these actions really is kind of meaningless to me. Like, I don't see one as being more advantageous than the other. So I think I'm just going to let these get called away. And then I'm just going to use this 2 grand as collateral to sell a cash secured put. On over the weekend, right, I will be paid 2350, and then I'll end up with a small cash position here again. All right, what's Tesla doing? Let's see. Yeah, there's my put I just sold. All right, so with that 2350, I'm going to end up having some buying power again. So I'm tempted to go ahead and add another long call here. Just kind of dollar cost average into this. Nothing really to do with the covered call that I sold. Let's see, March 20th of 2026, right? Just gonna go ahead and pick up one more. All right. I think that will do it. Okay. I panicked for a second because this little thing saying that I have in the money options. Like, of course I do. I bought leaps. So I'm supposed to have in the money options. All right, MSTY. I'm only gonna take a look at it. I think I'm still down about 15 grand. But ex-dividend date was yesterday, which means I will be paid some dividends and Tasty Trade will automatically purchase. I signed up for drip, so it will automatically purchase some more Misty shares at approximately $20 a share. And so at some point next week, I will have 10% more shares than I do now. Let's just say that they pay us out, um, 10% on 20 a share, 8,000 shares. So what is that? $2 a share. They'll pay me out 16, 17 grand. And that would be what, 800 shares? Yeah. So, Monday I should have like 9,200 shares or something, which would mean that I will be no longer 15 grand behind them. I'll be them. I'll be down like closer to 30 grand again. So every time I make a little, I start chipping away at their lead, they pay dividends out and put me behind the eight ball again. So I just am like watching paint dry, waiting for a freaking pump so that I can tap dance and declare victory. But until then, they've had me over a barrel. All right, the joint account. I added these covered calls just this week, so can't be much of anything to do here. Tesla. Yeah, 35 days left on that. Nothing to do. And no cash, right? Nope. All right. My allowance. I opened up this cash secured put, these two cash secured puts. They're pretty close to the same price. They've only been open for a day. So these will either make money or not. They're kind of just on autopilot. I've got 28 days left on this covered call. So next week, very likely that I will roll this. And yeah, so it says I've got 2 grand to spend, but really 1,600 of that is tied up in this credit spread. So I'm going to ignore that buying power. All right, here's the challenge account. These, oh man. So, well, it's only one, but that's going to cost me 4,600. No fill. Okay. And so in this one, I really did paint myself into a corner because I've collected so many of these long call positions, and all of these Julys are just huge losers, like 90% down on these positions. So all of so whereas MSTY has, sent out all of their dividends to their shareholders as dividend payments, I plowed all mine into long calls, and those long calls has basically completely evaporated. So, like, it's almost 700 a pop times 40, 28. Is that 28,000? Yeah. So, lost about 25 to 30 grand plowing all of my premiums into these long calls that have basically just evaporated in value. If the price was 350, 400 a share, then we might be having a completely different conversation. But as I mentioned before, leverage to the downside is absolutely destructive to capital. So it does look like um, these will be exactly as the title described. Like the number's going to go up, but not in time for these bad boys. And even if is it Roscoe? Even if Roscoe is correct and we're at 600 a share in July, these will still be losers because these will still be $600, $500 out of the money. So while he might be able to win um, a bet under, buying a call under the 600 strike, these are like losers under anything but extreme conditions, right? I would say within the next week, we'd have to pump to like 600 a share in order for these to break even. So that ain't happening. So yeah, I'm already looking forward to the Septembers. And if we don't get a pump before September, then these will fall victim to the exact same thing that these will. And I will have started rolling into like January 2026 or something. And, hopefully it won't be like Charlie Brown trying to kick a field goal and Lucy just pulling the ball away every time, right? At some point, I have to kick the fucking football, right? Through the uprights. That would be nice. All right, so I got the 200 shares. The frickin' long calls that I bought are still slightly out of the money. This is kind of brutal right here because the negative theta drag on the account on these are getting higher as these start to go out of the money, and it makes it very difficult to collect meaningful premium, meaning it's harder for me to get more positive theta relative to the negative theta draw that these have. But these are all capped out. I'll probably have to hold these for at least another week or two before I can roll them out for some more premium. However, 33% call away value is not bad on these. And then I've got 145 DTE call against my shares. So that leaves me with exactly one more call to like try to get some positive theta. So that puts me, what did I say? 60? I got to compensate for 65. So somewhere around, 100 would make me feel good. So again, I can sell the 325, give myself a little bit of upside here. So going to the expected move, I think kind of makes sense. If I'm thinking number go up, I don't necessarily want to limit my upside too much. All right, so I'm barely just eking out a little bit of positive theta here. I'm okay with that. Oh no, I'm not. because I have a negative balance. I'm using margin, so I got to come up with 4 grand. I might have to roll that down. Let's see, are there any long positions that I can do for a profit? No. So I'm gonna go ahead and peel off some shares. What's 16 shares gonna get? Is that gonna give me the full amount I need? It's gonna be cutting it close. All right, so I can actually sell 2 less shares than that. 4? All right, cool. I'm not using margin. Them's the rules. So unfortunately, getting wrecked on that covered call strike forced me to have to peel off some of my shares. It was either that or the leverage. Probably could have used that excuse to sell these. Well, let's see, 40 times 70. Yeah, that wouldn't have been enough. 2,800 bucks. All right, we shall see. I think I've checked all the boxes. I'm not using margin. I've got some positive theta here. But unfortunately, I had to sell off 14 shares to make that happen. Now, the only thing that's going to piss me off is if we do see 250 again in a week or two, then I should have just sold these fucking leverage positions when I had the chance. But oh well, we shall see. All right, the 5K account. All right, Victor said I sold my MSTY this morning. Easier for me to just write a covered call when I need income and not have to manage yet another asset. Yeah, that sounds about right. Joshua, did you close out or roll any covered calls today? Sorry, just joined. Yeah, I can't punish everyone who's been watching me do that to do it all over again. Cajas Bellas, ¿cómo se puede hacer para la traducción del video en tiempo real? I've been married to a Puerto Rican for 25 years, but I don't know what you just said. Let's see. Can we something the video in real time? Can we do something about the video in real time? Yeah, I don't know. I can't make it happen. Somebody translate. Somebody was speaking French to me the other day on the True North call. That shit was hilarious. I threw it into Google Translate during the call, and it was Soleil looks like he hasn't seen the sun or a pillow. Get some rest. That shit was fucking funny. All right, so I've got CLSK call. It's worth $1. Close it. Sold the 8. It's at 740. I could let this expire and reopen one next Monday, but I don't have that. I'd rather just get it over with Friday to Friday. I can turn right back around and sell the 8. That's kind of 10% out of the money. Current price is 740. 10% of the money would be the 75 cents plus that. So that would be around the 815-ish. So, I could sell the 8 or the 8.5, whatever makes sense. I think leaning towards the 8 makes sense because you're going to get screwed on the bid-ask spread by $1. I just got screwed by the bid-ask spread by having to buy it back for $1. So you're already looking at, you're not really going to make 18 on this. you're gonna make 17, and then when you buy it back on next Friday, you're gonna make 16. So keep in mind when I throw things out and they're like, "Oh, this is a little over 2% return on capital," there's friction that you have to pay for when you open and close these positions. So when I'm eyeballing it and saying, "Oh yeah, 2% return on capital," it's not it's not uh it's not quite the case. All right, same thing for iron, buy it back for $1. View all options, put it back on for next week. 10% out of the money is really just the $6 strike, approximately, again, 2% return on capital. I'm completely ignoring my cost basis. My cost basis is going to be way over this, I would assume. So if these get called away at 6, yeah, my average cost is 638. So I would probably be breaking even on these if I get called away at 6 because of how much um premium I've collected, and that's completely fine for me. All right, I'm gonna have to walk this down another dollar. If this does not fill in 5, 4, 3, 2, 1, I don't have time for this shit. So what do I have to sell it for? 12? Yeah, I'm just gonna smash the bid. Done. Next, we've got so my iron pit put, I sold the 6. It's in the money, so this will be assigned. I will own 100 more shares, which will lower my cost basis from 638 to what, 619. So that's fine. Riot, same deal. Buy it back. Fuel options next week. Sell call. 10% out of the money is gonna get me to at least the 750. This is not gospel. Like if I was gonna if I was gonna like sell option courses or something, which I don't intend to, but my one rule would be like, if I wanted to throw like a satisfaction guarantee or something in there, it would be like, okay, if you if you create a position that has a net positive theta and you're not happy with your results in 6 months, then, here's your money back for the course or something. So, I don't really care if you buy the shares for 6.95 and sell the 7, or you sell the 7.5, or you sell the 8. Yeah, some people like a certain delta, they like the point 0.1 or the 0.16 or the point 0.2 or the point 0.3 or whatever. I don't really care. I think as long as you're collecting some theta and you're comfortable with the call away value, I think that's a winner. So, this is about 2% return on capital for the week. It's not quite 10% call away value, but of course they're going to make me walk this down. There's 500. Okay, okay, there we go. We got to fill. Like it went up to like 1,000 bids at 17 and nobody wanted my 18. Come on. Come on, man. All right. The only thing that's expiring today is the iron put. I will be assigned 100 shares at the $6 strike. Monday, I'll turn around and sell a covered call against it. That will be step 2 of the wheel. Here's all my 417s that I rolled. So this one might be interesting. Let's see, 5-2 is 3 weeks away, 3 weeks and some change. I got an average credit of 16. It's only worth 6. So I might be ready to roll this. Let's see if I roll this out to, it's going to be hard to even get much at 42, I think. Yeah, I can roll to the $3 strike for God's sake. Bid-ask spread is not great. The 250, oh my god, that's basically at the money. So that's not gonna work. Let's see about if I go all the way to 49 days. Yeah, can't get jack shit at the $4 strike, and the liquidity is terrible. So I'm thinking I'm just gonna have to wait. Like, this wolf position was a giant disaster anyway. It's super cheap, so, it kinda doesn't matter really in the long run. But I try to avoid any stocks too far under $10 a share, right? The miners are hanging around 10, down to 6, 7, 8 is not the end of the world. But Wolf, I should have known better. Like, it got to that range at its all-time highs. And so now it's just kind of coming back to earth. And it's extremely difficult to squeeze any meaningful premium out of these damn things. So just be aware of that. There was another option seller that I knew, and he would sell tons of like cash secured puts on the frickin' there was this damn weed stock or something that was at like fuck. I mean, it was like trading at $1 a share, and he had like, I don't know, a half a million dollars he was plowing into it though. So he was literally selling thousands and thousands of these puts a week and making like, 2 cents on each one. So $2. But, he's making a couple grand a week on these damn things. But it was like, what's the point, dude? That's uh, anyway. Selling holy shit. So actually this is kind of intriguing. So while I just said that it's hard to get premium here, like oh, that's the call. No wonder. Of course not. Yeah. So this is actually still kind of intriguing. It's not what I was just looking at, but if the bid ask spread wasn't shite, right? This is a 4-cent bid ask spread on an option price that's 7 cents. So like the bid ask spread is half the size of the entire contract. But if you could actually get a fill for 7, I mean, that's a 3% return on capital, So if I only had $200 to my name, like, I don't know, I guess this is like I might throw some kind of fucking Hail Mary at this. Um, it would at least be fun to practice the strategy while you're learning and have some real money on the line. It's hard to learn necessarily playing with the sandbox, playing with the fake money. But, running the wheel, what's the worst that would happen? You lose 200 bucks on this. But yeah, it's definitely not optimal. If you can afford to trade something with some meat on the bone, like this is like you already ate most of the chicken wing and you're just trying to gnaw a little bit of meat off the fucking elbow. Like this is just really hard to do here. So I will be more than happy for my wolf shares to get called away so that I don't have to deal with them anymore. All right, I got my 380 calls that I sold. Nothing to do with these until it's time for me to roll my 300s. And I'm going to give myself until next week to roll these bad boys out. Would love for these fucking things to go in the money so I can recoup a little bit of the value. Um, Still going to be huge losers, but what are you going to do? Yeah, so one more week on these, and I will need to close the 380s and the 300s all in one fell swoop. I will make a decision on these July 18th. And by make a decision, I mean I will, just dust myself off and calculate my losses and basically move on to trying to win win the September bet. These are down 50%, but I'm not pessimistic about September. I'm basically giving up hope for July. I gave up hope on June like 2 weeks ago. All right, that's all the trades for today. Let's get caught up here. Victor says, "How do I set up the video to do real-time translation?" Oh, that's funny. Um, I wish I knew. Ask Groke. Justin, Nithu using Chrome is so fiat. Yeah, I um I actually use several different browsers because they remember your passwords. So like I can have some things open in Chrome and then I can have some other things, I can be signed into the same platform but on a different account with Edge. And then I guess my favorite is Brave. I think they're the best for privacy, but yeah. Yeah, that's not the first time I've been made fun of. I think was like for not using like darkness mode or something too in is that Twitter? I think I'm still yeah, I think I'm still using light mode in Twitter or something. People clown on me for different things. Won't be the last time. All right. I guess that's time to end the video with me getting roasted. So be good, y'all.